Hello, good morning, everyone. Welcome to all of you for today's session. Students, just let me know whether you people can hear me well. Can you hear me?
Yes,
Yes, sir.
All right, now. So students, we in the last class, we started control objectives. We discussed about that, and we will be proceeding with the same discussion today itself as well. Now, so students, let me connect my iPad with it. Just a minute, please. Yes. So, student, as per the lecture plan, the topic for today is component of controls. So, component of controls, control documentation, and some other areas which we have to cover today itself. So, let us proceed. Yes. Students, we know that it is the responsibility of company management to prepare financial statements. It is the responsibility of company management to prepare financial statements. Yes. And they have to implement controls to ensure financial statements meet their objective. Financial statements prepared are accurate. We know that. So, auditor and internal controls of client. Client means the company which auditor is going to audit. Which auditor is going to audit? The company. So auditor and internal controls of client. So what does auditor do about the control? Auditor comes to the company. Auditor understands the control of company. Understands the control. Then auditor documents the controls. Document the controls. Prepare a documentation that how controls are working. And then auditor performs walk-through test and then performs test of control. Note it down. Note down these 4 steps. The question is, why auditor is doing all this? Why auditor tests the controls of company? This is the question. Students, if you have prepared the last lecture, I told you people that auditor implements controls in the company. Company management implements controls in the company to ensure financial statement objectives are achieved. We discussed that. What are the financial statement objectives? What are the financial statement assertions? We talked about that in the last class. We discussed that. Now, the point is, financial statement objectives. What they are? Accuracy of transactions at correct amount, completeness, account balances valuation is accurate, and so on. Financial statements are accurately presented. These are all objectives of financial statements. Now, so students, auditor comes to the company, auditor tests the controls of company to verify or assess whether controls of company are working properly, effectively, they are achieving the objectives or not. If they to verify now. So students, after verification, test the controls. Now, two things may happen. Two results may occur. One of the two. One, controls are weak, ineffective, not working properly. The second case is controls are effective, working properly. They're working properly. They're working properly. Controls. Now, so two possibilities. If controls are weak, not working effectively, it means financial statement may contain a lot of chances because control didn't work properly. So when controls were not working properly, so financial statements prepared through those controls may contain a lot of errors, misstatement, incorrect amount, omissions, high chance. It means yes. Now, the second point is The second point is, if controls are working effectively, it means less chances of misstatement in financial statements. Because control works very well, appropriately. Now, next. The next point is, so in this case, when may contain a lot of errors, it means auditor needs to perform a lot of audit work on financial statements to detect those misstatements. And here, less audit work required to be performed on financial statements by auditor. Less audit work is required. Now, students, the audit work on financial statements to detect misstatement, it is called substantive test. Substantive test. Yes, it is called substantive test. It is called substantive test. Now, so students, in other words, auditor test the controls of company to determine how much substantive tests needs to be performed on financial statements. Yes, that's the point. That's the point. That is the point. How much substantive tests are required? Now, next. So students, let us proceed further. Is it clear to everyone that why auditor tests the controls of company? Is it clear?
Yes, sir.
Good. Now, let us proceed further. Students, one thing I want to tell you, I told you a test which I will be conducting. So please get ready. Your test will go live by this evening. And it will be available to you in the next 48 hours. You can attempt it. Next 48 hours. Okay? On the website, it will go live by this evening. It will be 15 MCQs. And do attempt it, everyone. Right? Now, next point. The next point is, so we have come to know that why auditor tests the controls of company. Okay, once again a story. Once again the same story. Students, auditor comes to the company at planning stage of audit, which we have not covered yet. Audit. Auditor assesses whether controls of company seem to be working. If seem to be working, then he needs to go for yes or no to assessment at the planning stage of audit. Now he has to choose audit approach. What is the approach auditor has to use for the audit? Auditor needs to choose the approach. The approaches can be two. If yes, the approach will be test of control plus substantive test. He should go for test of control and substantive approach. If controls of the company are not working, seem not to be working, he should go for only detailed substantive test on financial statement. Two approaches are available. Now, this, what I am saying, this is the approach one. This is, for example, if we name it, it is approach one. It is approach two. We name, for example, we name it. This I have talked about approach one. This is approach one. If controls are not working, no need to go for test of control. Simply go for detailed testing. You will not be testing the control then, in this case. Now, so we have talked about approach one. It depends upon the situation. At the planning stage of audit, but auditor will understand that whether the control of the company seem to working or not. If not seem to working, perform test of control plus substantive approach. Otherwise, the second one. Only detailed substantive test, extensive substantive test on financial statements. Now, so students, what are the substantive tests, by the way? I told you substantive tests are the audit work by auditor on financial statements to detect misstatements. Now, so one by one. So now we will be talking about auditor and internal. So I have given you the overview of the bigger picture. Bigger picture I have shown you. Now we will each at every point one by one. Understanding the control by auditor. Understanding of control by auditor. Auditor understands the control. Now, understanding of control, what does it mean? It is basically called components of control. That what controls actually are. What are the elements of 5 components of control when we understand? So components of control, first of all is control environment. Students, environment. Now, students, listen please. What is the environment? Environment is basically that surrounding factor under which controls have to be performed. Factored. For example, organization, management approach towards control or attitude towards control. If management thinks controls are not important, they are not giving importance. Although detailed controls are implemented, but the management themselves are not, they are disregarding it. So people will not be following controls then. Means there will be control environment will be weak. Organizations, HR policies. For example, you recruit people on which basis? What is the process of hiring? What is the process of promotion? Defined processes, quality work basis, control environment will be good. If the processes are not well defined, control environment will be weak. Control environment will be weak. Now, next. Come back to the note. Let us go to the notes. You see, this is a wonderful, you see here, the same overview. Planning stage is done. Control, expectations are controlled and working effectively. Assessment. Yes. Perform test of control. No. Perform substantive test. Detail. Test of control. After testing the control, proved controls are operating effectively. Yes. No. Now, I have even given the more detail, separate, 2 formats. Okay, now. So components of internal control. Components. Control environment. Yeah, the first thing. The framework I was telling framework under which controls operate. So control environment, that how much importance is given to integrity, honesty, ethical values. How much this all is emphasized within the company. How much? Commitment to competence, which I was telling you, basically HR policies. That how people, for when they hired, how competence is preferred. How? Participation by those charged with governance. With those charged with governance are directors of company. Directors of company are called those charged with governance. Directors of company are called those charged with governance. Now, so how much directors are independently reviewing the operation? Directors have to review, monitor, control, monitor the auditor, and how much they are. If everyone knows, yes, directors are here, everyone will be alert. Directors are watching us. So management's philosophy, what a wonderful point. Management philosophy and operating style. Management's philosophy and operating style. If management says no, we will never take a risk. We will never take a risk. We will never take a risk. Or we are taking too much risk. Business risk. Management thinks controls are regarding financial statement. Okay, good, not good. Good or not good. How important they are. What is management's action? You know, I told you attitude of management regarding financial statements. If management say no, not that important. Their attitude, the attitude is reflecting in daily routine. It is not spoken word. Attitude is not spoken word. Attitude is reflected that when you are dealing with something, how important you are. For example, accountant comes, sir, kindly sign this purchase requisition. I say, okay, sign yourself. Don't come to me. No, I am not. Don't come to me for these jobs. It means I am not giving importance to the controls. It is clearly reflecting. Now, the next point is, so yes, towards information processing, accounting, I am not giving due importance. So this importance will communicate in the organization that controls are not considered to be important here. Boss himself is not signing the requisition. So no one will follow. Organization structure and authority and responsibility, both I will discuss together. If within the company roles are properly defined, they are properly planned activities, properly authorities delegated, responsibility delegated, performance is in routine, reviewed, controlled, everything is wonderfully hierarchy, system. It means control, or everything is messy, no system of anything, no process is not defined well. Control environment will form, everything will be messy in the company. There will be frustration among the staff. The next is HR policies and practices. HR policies and practices. That's training, evaluation, promotion, compensation. On which basis? How it is done? The processes. Very well defined processes or not? So this is what the control environment is. You need to memorize these points. This side you need to grasp. You can write in your own words in few lines. Now, auditor, this is very important. Now, what auditor will do about control environment? Here comes. What the auditor will do? Auditor shall assess whether these elements of control environment have been implemented by using a combination of inquiries of management, inquire from management, observe in the company, inspects the document and the policies. Auditor will, you see here, this, we have talked about this, two points. What the control environment is, what it is, and what auditor will do about it. There are 5 components of control. We have talked about one yet. For each component, the same 2 points will be discussed. Come to the entity's risk assessment process. Risk assessment. Each good company has a process defined that what are the risks. Here, financial reporting objectives, assertion. Things may be misstated. So, entity has the process to identify business risk. Identify. Entity has, company has. Estimate the significance of the risk. Assess the likelihood of occurrence. Likelihood of occurrence of risk. Probability of occurrence. And then how to address those risks. So these 4-step process, each good organization has, which have wonderful control environment. Good means wonderful control component of control. 4-step process they have. Identify risks arising because of which financial statement may be misstated. What is the significance of the evaluate? Likelihood of occurrence. And how to address those risks. Now, what auditor will do? The first thing done. What it is. Now, what auditor will do about it? If entity has such a process, the auditor shall obtain understanding that process. What is the process? Well, how it is working, how good it is. If there is no process in the company, discuss with the management how they are addressing risk. So now, next. Student, is it clear so far? Tell me. Is it clear so far? Tell me, please.
Yes.
To everyone, student?
Yes, sir.
Good. So I have decided that I will be taking every 2 to 3 weeks one test. It is third week and you are going to have a test. So remember that in your mind. Every 3 weeks, most likely, we will be having a test. Okay. So same area. And these tests, I told you, I think in the last class, I am preparing. You will not find this test anywhere in the world because I am creating that. I'm spending time and I want the same enthusiasm from your side as well. Okay. I want same response from your side. If you want to keep this alive in me throughout the session, you should respond with the same level of motivation. Now, so information system relevant, third point. Information system, you know that. How transactions are initiated, processed, recorded, authorized. You know that when you documents create, purchase order, purchase acquisition, purchase order, purchase invoice, goods received note. This is how information is being captured. Information is being captured. So policies and procedure to initiate, record, process, and report anti-transaction, so that relevant assets, liabilities, and equity people are accountable. And who have used these assets, who have made a change. Without an information capturing, when you prepare purchase acquisition, information is captured at that stage. When you prepare purchase order, once again it is captured. Now it is being processed as well. Authority, signature, everything. Processing, role. So auditor, now what auditor will do? How the entity communicates. How the roles and responsibilities have been assigned regarding processing of transaction initiation. Auditor shall understand. The next is control activities, specific activities. Specific activities. What are the specific activities? Which are designed to detect, prevent, and correct. Prevent, detect, and correct errors and frauds in financial statements. Specific error, specific activities. Specific activities. For example, authorization of purchases, authorization of expenses. Yes, I will add more. Recalculation. Note please, along with it. One person calculates, the other reviews. Recalculates. Performance reviews of employees. Information processing limits. Not everyone can process every transaction. Not everyone can process every transaction. Physical access control. That physical access control. Access of stores. Not everyone is allowed to enter. Cash department, not everyone allowed to enter. server room, not everyone allowed to enter. Then is the segregation of duties, very important control. What is segregation of duties? Where one transaction is broken down into parts, and different part of same transaction is performed by different person. Yes, purchase requisition is prepared by one person, approved by another person. Then purchase order is prepared by a third person, approved by a fourth person. Goods received by another person, GRN created and recorded in the account. 3, 4, 5% in the purchasing transaction. 4, 5% are involved. This is called segregation of duties. Segregation of duties. Now, next. So, auditor, what auditor will do? Auditor will obtain an understanding of control activities. That's how relevant to financial statements, audits. Please send your question to everyone so that I can respond. Dear, send your question to everyone, please. So that then I'll be answering. So everyone will have the idea of question as well, that what is being asked. Okay, sorry, it is already okay. Thank you. Thank you. Management response, of course. No, I have not spoken the word internal auditor yet. Have I spoken? Have I discussed internal auditor? Why you are discussing that? Auditor means external auditor. When internal auditor is spoken, when the specific internal is mentioned. So word auditor means, remember, when the word auditor is spoken, it always means external auditor who is auditing the financial statement. Auditor does not mean internal auditor. Does not mean. So whenever you have to, anyone has to refer internal, they must mention internal auditor. Okay? So your question is right, that auditor is not responsible for control. Auditor is just testing, even auditor is not responsible for financial statement. It is management responsible. Of course. So it is clear, Nabiha, is it clear to everyone? A very good question. I appreciate if you keep asking questions like this. I love that. So that things are clarified. Whatever, never think your question is childish. Never think. Some students don't ask question. Oh, my question might be childish. Some say foolish question. It turned out to be no. So they never think that. Next. The next is the monitoring of control. What is monitoring of control? Monitoring of control means that once the controls management has implemented, management must ongoingly On ongoing basis, they should monitor the controls. That management should have a system in place that over time, whether controls are working properly, it is a process. Management has the process themselves. And if there are any changes required, they should make corrective action. So monitoring is done by management themselves. By management themselves. Then auditor shall take understanding of major activities that the entity used to monitor control. Then how auditor will check how management is monitoring the control. And how entity corrects any corrective actions are taken to deficiencies in control. How management is doing that. Auditor will take understanding of all that process. Now, limitations of internal control. Limitations of internal control. What are the limitations? Students, internal controls have some limitations. For example, the one limitation is cost and benefit. Implementation control has a cost. Whether cost of implementing the control and benefits derived from the control, what they are. Cost and benefit. The second is potential for human error. Yes, even controls are implemented. For example, controller that I have given a card which I can swap and enter the cash department. Now I mistakenly forget that card on my table. Now anyone can get that and enter. Error, my error, mistake. Yes. Collusion between employees. Collusion. You can complete it. Controls can be bypassed. Can be bypassed. You know, there is a security guard which is at the gate of cash department. Then there is cashier. Then there is a person comes, enter the cash department. Security guard should not allow him, who is not authorized. But they have joined together to do fraud. A person. And cashier, he takes cash, 100,000, and they distribute. They say, okay, let us join together. Do a fraud of 100,000 in the company. You are responsible for security, for theft of cash. But please collaborate with me. I will give you 30,000. This is called collusion. They contact the CCTV camera room and tell them, I will give you 10,000. You need to turn off the CCTV cameras for 10 minutes at this time. And I will steal the money. Okay, we can say there was an error later on. So collusion, when people join together to do fraud, employees, no one can stop it then. If management is not following controls, then no one will follow. Then no one will follow. Yes. Controls are designed for the foreseeable transaction. The what we you see, that what transaction can happen. Foreseeable transaction. And yes, foreseeable transaction. If the transactions are done which were actually non-routine, hackers, fraudster, they enter the system by following a way which is unusual. They find loopholes and they enter in the system. They enter in the system by finding loopholes. Yes. Now, next. So, limitations of internal control. If there is any question, do ask. Otherwise, I'll proceed further towards recording of control. Okay, students, we have done understanding I started with it. So understanding the control has been completed. It is done already. Now documentation of control I will proceed with. Documentation of control. How the control documentation is done. That I am auditor, I am understanding the controls of company. Now I need to maintain a record of controls with me. I need to maintain a record of the controls with me. And what are the ways to document the control? Documentation of control. How the controls are documented. How they are documented. Four ways. Auditor can use one method out of these two, whatever he likes. The one is called narrative notes. Flow charts. Checklist. Checklist and questionnaire. Questionnaires. Four ways to document the control. Now, the next point is narrative notes. Narrative note. How the controls. I am auditor. Now think. Listen. I am auditor of company and I am recording the controls of company in the form of narration. Narration. Story. That first of all, purchase requisition is prepared by stores department. Stores manager checks the level of inventory and then mark it and then authorizes the purchase requisition. Then he sends that to the purchase department. Purchase department obtain the quotation from supplier and then accept the quotation and prepare the purchase order. You know? Got my point? The storytelling, narrative note. What are the flow charts? This is flow chart I am preparing, by the way, diagrammatic form. That this is the stores department. Requisition is going there. Purchase order, purchasing department. They are processing to the supplier. So in the diagrammatic form, flow chart. Flow chart is diagram. Checklist. What is checklist? I have prepared, being auditor, list of controls. List of controls which should be present. I have, for example, purchase requisition is authorized by store manager. Purchase order is multi-copied, approved by purchase manager. I have prepared a list of controls. Now I go to the company and say, okay, tell me, purchase requisition, I will check. Purchase requisition, authorized by the store manager? Yes. Okay, check. The second control, multi-copied? Yes. Approved by purchase manager? Yes. So checklist. Questionnaire I will discuss at the end. Come to the notes first. Narrative notes. Story. Narrative notes. Commentary. Criticism will also be done. That this thing is not working properly. Okay, we have talked to the management or whatever it is. Okay. So intelligent understanding of the system. Storytelling along with comments, criticism as well. That this thing in the company is not working. Relatively simple ways. Used for any system, any control system. If they are computerized in the future, you can edit them if you have typed in the Word document. Disadvantages. Time consuming, yeah, as compared to flow chart. If written manually, yes, awkward to update. Yes, without thorough reading, you cannot identify which controls are missing. A control exception. Control exception means control weakness. You cannot, it is, in the story, you may not be able to identify which control is missing as compared to this flow chart. You can easily spot overall bigger picture and say, oh, this control here, it is not working properly. This one is not working properly. It should be one thing here as well. For example, but in the charts, in the notes, it is not easy to identify any weakness in the control. Now, so flow chart symbol, input, process, output, this is flow chart. Now, next, advantages. Can be prepared quickly with a little experience. Information is presented in the standard form. They are fairly easy to follow and to review. easy to follow and to review. Yes, we can easily start, and we can identify any loose end. Loose end means exception. Loose end mean exception. Which area is weak in the control? With cursory examination, cursor of mouse. Okay, this area. Means you need not to go dig in deep, read in deep. Rather, you just can see apparently, okay, this area is weak. They eliminate the need for extensive narrative and can be of considerable help. Yes. And point any deficiency in control. Very good. Now, disadvantages. For standard systems, they are good. Unusual transaction. Unusual circumstance. For example, they say normally, for example, this is the system we are drafting. They go for review there, then forward here. But sometimes quality control also comes and then check it sometime. So such commentary you have to write in a narrative word. This is drawback. Unusual. Sometimes quality control comes unusual. Narrative notes. Major amendment is difficult without redrawing. Yes. You need to redraw the whole notes because the system data flow diagrams. Now, you are charting. Charting means preparing the chart, the whole control system. And time may be wasted. Those areas which have no audit significance. In other words, no relation with financial statements. Which areas of audit significance, which are related to financial statements? Other controls, employee safety, employees, how timekeeping is done, right? For example. Now, checklist. Come to the checklist first. Then I will come to the questionnaire. Checklist. So, checklist may be used. Okay, right. Instead of asking questions, statements are made to mark off tick boxes, which are true. Supplies are examined, would be ticked. And crossed if not. I have deleted. Yes, I have deleted by chance. So which one is not true? That is crossed. No, it is not being done. Checklist. The next is questionnaire. Students, questionnaire. I will take a 5 minutes break. Okay. Then I'll be back and I will continue with the questionnaire. So in 5 minutes we will meet. Yes, students, can you hear me, everyone? Can you hear me? All right, now, so I will keep the camera off for a while now because of some power cut here now, but I will continue the class. So, students, the questionnaires. So, questionnaires are prepared by auditor. And they are distributed to be filled by companies or clients, staff. They're distributed among them. Auditor prepare questionnaire. Now, the point is, questionnaires are of two types. One is called internal control questionnaire. The other is called internal control evaluation questionnaire. ICQ, ICEQ. There are two types of questionnaire: internal control questionnaire and internal control evaluation questionnaire. So internal control questionnaire asks the question about specific controls are working, specific controls are implemented. Yes, better word. And this asks questions. It asks the questions whether control objectives are being met or not. Control objectives are being met or not. Now, two different points. So, specific, let me give you example. For example, ICQ asked the question, example, cards of the person entering building are checked before they enter the building. Cards are being checked. Second point. What will be the ICEQ? What will be the relevant ICEQ? Relevant ICEQ will be, can anyone enter the building without card checking? You see the difference between the both questions. Now, so students, just focus. Another example. Another example. Purchases, sorry, employees leaving the company. The company must deposit their timesheet Student, just a minute, please. There is some glitch. I'm sorry, just a minute. Just a minute, please. There is some glitch at my side. Just a minute, please. Yes, students. Now, I think it is fixed now. So, students, employees leaving the company must deposit their timesheet to get their wages cleared. A question. A question. Yes or no? The answer. So the ICEQ, can wages of employees be paid without timesheets? Can wages of employees be paid without timesheets? Yes. Can be paid or not? Now, you see here, the point is these are ICEQ, that this objective can be bypassed. Can it happen without it? They are talking about just this activity is being performed. Activity, control activity is being performed or not? Being performed. Being performed. It might be possible that activity is being performed, but without that, things might also be happening. Bypassing. Objective may not be achieved. You are checking the card. Okay? Checking the card. But one person can bypass that process. So, you see here, for ICQ, if answer is yes, it means control is working. I'm sorry, students. The problem I'm facing today, that is unprecedented. I'm sorry. We have two connections, and both are doing the problem all of a sudden today. I'm